Okay. I see at the wrong place at the coast. Can you guys see me?
Yes, we can see the screen and we can hear you.
Can you see as I'm moving the screen?
Yes, we can.
As I'm
Yes.
moving the slides?
Yes.
Yes.
Finally, thank you, Jesus. Hallelujah.
Amen.
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 Okay, let's start. So, okay, no, that's not what we're talking about today. We're talking about. Okay, today we're talking about stock trader versus stock investor. A lot of you don't know who you are, and I have to make you understand who you are. A lot of people want to be investors but act like traders, and a lot of you want to be traders but act like an investor. Firstly, um who's a stock trader? A stock trader is someone that buys and sells stocks frequently and focus on short term. So your goal is to profit from daily, weekly, or monthly price movements, right? And you are timing the markets. Keep this word timing the market. So you are timing the market. And you mostly use things like charts and technical analysis or market trend or news, just like how we leverage news and say, okay, this stock will soon go up because of this news, blah, blah, blah. Example, a trader buys Dangote cement shares today and sells next week if the price rises by 10%. Do you understand? That is who a trader is. That is not who an investor is. So, who is an investor? An investor is someone who focuses on long term, buys and hold for years. Years, oh, good. And your goal is to build wealth gradually through growth and dividends. So yeah, in it for both capital appreciation and for dividends. And your mindset, you time the market, right? But the difference is you work with mostly the company's fundamentals. So one difference between a stock trader and a stock investor is a stock trader focuses on technical analysis and few fundamentals, while a stock investor focuses on long-term growth and fundamentals, especially the fundamental. Fundamental is the important part. That's what you need for long-term growth to know if this thing is worth keeping for a long time. Okay. I also looking at like what the economy is saying to know if it is worth investing or not. An example is if an investor buys Zenith Bank shares and they hold it for 10 years plus to enjoy their dividends plus capital appreciation, right? It's not any type of stock you can hold for long term. Good. And what are the pros and cons of trading? You make quick profits very fast. It's exciting. You get actively involved. You check this thing every day, every second, every moment. Has this thing gone up? Let me quickly sell. But there's high risk involved. You can lose money in the process. And it's not just anybody that can actually trade. This thing requires your time, your skill, and your discipline because you have to check the technical analysis very strongly. You have to check the technical analysis very strongly to be sure that this thing is worth doing now, the fundamentals, and all of that, to be sure that this thing is worth doing this short term trade for. Because if it flops, you will lose money and you will lose money badly. Okay. And then the transaction cost is high because, see, for example, now you want to buy a stock, and let's say you buy like 500K worth of it, and Bamboo, for example, is removing like, let me say, 5,000 naira from the money, and you make 10% of that this thing. You're okay, 10% of 500K, that's 550, and you say you want to sell it. It's the charges that you be removing from here to there to the next stock to buy this thing. It's a lot. Bamboo will just be looking at you and be smiling. Sometimes I'm like, these bamboo people, I'm sure in their mind, they just used to look at me and laugh at me that this girl, she just they give us charges anyhow. Because the moment when you're taking stock from year to there, from there to year, yes, you're making profits, but at the same time, you are giving these people free opportunity to chop your money. Why for if it's for long-term investors, it's not that way because the moment you buy, it may take you like a couple of time years, months, and all of that before you finally sell. But we that we are doing from one pillar to post, you're giving them a lot of money. Like you're losing a lot of money from charges, even though you're still making money, right? So, pros and cons of being an investor. Now, that's different from trading. Builds long-term wealth, very good. Passive income from dividends, very good. It is less stressful. You can buy it and not even check again. In fact, a long-term investor has no business checking the price of stocks every 2 seconds. You can even choose to delete the app and not check it for the next 1 year, right? That's who a long-term investor is. Whether the price is down, whether the price is up, you don't care because you know what you're getting from these people. Unless if okay, you just want to be topping up regularly, that's your own business to be topping up regularly. You're not scared if the price is dropping, if the price is going up or going down. You're not caring about all of that, and that's who a long-term investor is, right? It also requires patience because it's not a get rich quick scheme. You have to be very, very patient. An investor that is waiting for 10 years, is that not patience? There's this saying by Warren Buffett: you have no business holding a stock for 10 minutes if you cannot hold it for 10 years. That's who an investor is. He's an investor, he's not a trader, he's an investor. So actively, he puts his money for long term. Do you understand? So you should listen to him more often if you are an investor. And now, if there's like market downturn, it can affect the value temporarily. And this is not a big deal because when the markets drop, it's actually a positive thing for you as the long-term investor. That's when you should even be happy to buy more. But instead, some of you say you're a long-term investor and you are rushing to panic. You bought stock yesterday, today the thing has dropped. Mr. Long-term investor, you're already crying that why is the shares dropping? Why? It's not supposed to be so. So yes, sometimes it will drop is a good but like most long-term investors pray and hope that they would that stock price would drop so they can acquire more. But if you are a trader, you have no business with price dropping. No. Once the price starts dropping below 10, 15, 20% of what you bought it, you go like jackpot unless that company is also worth keeping for long term and you are in it for the both of them. But if you are actively trading and only trading, you have no business losing money. Oh. So unless if you know that for the meantime it's just a little setback, and after that setback is going to come back up from your analysis. If not, you should even have like a level at which you will know that okay, once it crosses this price, I can't take that risk. It's too much risk, and it means that the price may actually drop. So you cannot be 100% right in predicting the market, even as a trader. Do you understand? But for long-term investors, you should be happy when price drop. Don't come and tell me that stock is dropping, the price is dropping, and you just bought it last week or this week. You bought it last month. You are telling me the price is dropping. Even if you bought it 3 months ago, if the price is dropping and you're a long-term investor, you're supposed to acquire more. Who is a long-term investor? Someone that can hold for more than 3 years, 5 years, 10 years. You can even hold till you die for the next 50 years. That's a long-term investor. But short-term investor, you don't have business holding a stock for more than 1 year, oh, but from like 3 months to 1 year. So don't expect that even as a short-term investor, unless the situation where you are timing the market based on a particular maybe news or whatever, just like how this whole insurance thing happened in August and we entered in July, and less than a month some people had 100% already and they are out of the market. Very good. Now some of these stocks that I recommended recently on the group is not this month they will do well. Oh. Let me just tell you down now. So as the price is even dropping this month, like August ending to September is like a period where most stocks do badly, like worldwide. It's not even just Nigeria. I don't know why that is so though. It has been recorded like over time that around this period stock prices drop, right? And to be honest, around July, August is always very bullish. And July this year was the most bullish Nigeria market has ever been, ever. So and now this period, I kept saying it that July. I was like, guys, it will be a bear market. So these things that people are doing, don't follow any rush and follow any random stock. Oh, it will be a bear market. Prices will drop. Wait till then. Let's buy new ones. So no wahala. The ones that their prices had not gone up, I've been saying, okay, buy, buy, buy. That the price has not gone up too much. So right now, if what you bought is you are seeing a drop and it's part of the stock that I recommended, please just go and buy more and stop panicking. Some of these stocks it might be till December before they will do well. Some of these stocks it might be till January. It can be till 6 months from now. It can be till like less than a year from now, but like about 1 year from now. Some of them are for long term, some of them are for short term, and I specified. So when I said mid to short term, it means that from like the next 6 months to 1 year, you should be expecting returns from this thing. Even if it's 20, 30% or 50%, you should be expecting returns from them. So if they drop at the moment, acquire more. And if you're a long-term investor, make sure you're not saying that something price is coming down, something you just bought last month. You have no business panicking when the stock market price is down as a long-term investor. So now, which is better for you? If you enjoy the daily market activity and the risk, you may prefer trading, meaning you like the up and down. It makes you go crazy. You just want to enjoy the money. But the kind of people that can enjoy this trading aspect is people that are putting in big money. If you go and invest 10 million naira now in one particular stock to get 10% the same day, or let's say the same week, you get 1 million naira extra. Even if they take out charges, the charges may be like, let's say 100k or 200k. But imagine you go and put 50k, say you want to go and trade. Trade that what? That's what happened. You get your 10% 5k. Bamboo will remove like 1,000 something from the 5k. Bamboo will remove like 1,000 something from the 5k. And that's it. But then and make money faster for long term. So instead for this kind of this thing, you don't look at 10% increment. You are looking at from 30% increment upwards. So once you get that 30%, for example, you put in like 100k, it has done 30%, that's 30k. Remove that 30k, if not all of them, because maybe the stock may still go up. Remove that 30k on top of it that you made. You can go and buy another stock to make money from it. So at least from that 30k, maybe it's just like 1k charges to remove. It's more reasonable than you go and do 10% of 100k, that's 10k. They now take out like 1k charges from it. You have 9k left. So what's the use? Which kind of business is that? So at least if it's 30k, they remove 1k from it to say, okay, 29,000 naira, use it to buy another stock. And meanwhile, that 100 naira you left in the 100k you left in the other one, it might still appreciate more. So you've at least taken out profits from it. So for about this taking out profits safe, even if you're a long-term investor, even if you're a short-term investor, please take out profits. It's beg and begging you. Some people say no, I'll leave it. Oh, you see, I know long-term investors that they will not touch that money at all. But take out profits so that even if this thing goes back to whatever it wants to go back to, you will know that you've made at least something out of it and you've not lose it. And you've not lose 30%, even if it's 30%, take out profits. When you do, leave the remaining money there, let it continue growing or compounding. And for most long-term investors, they actually prefer compounding where they don't take out any profit at all. You leave it to grow. If they send them dividends, they add more to it. But if you ask me, I prefer I'll first take out profits. The remaining ones can continue compounding over time. I can choose to be buying small, small over time, but let me know that part of my capital is out of that particular stock. But on the other hand, still, as a long term investor, you can choose not to sell at all for so many years and add more to it. But for a short term investor, once you get 30 to 50%, please take out profits. Even if that stock will do 100%, first take out profit so that in case it starts reversing, you will know that at least you've secured 30 to 50% of your initial investment. And that's a smarter way of being a short-term trader. If you leave it and say that you want to leave it till it's 100%, God fit catch you. May that in no 100, may it go back to zero. You will lose money and you lose it badly. That's why they say there's high risk in short-term trading. Good. Now, if you want steady wealth and financial freedom, you may prefer investing. You want something that is keeping you afloat, right? Good. Stick to investing. And please, if you don't have risk appetite, you don't have high risk appetite, just stick to long-term investing, JJ, and don't follow anybody and do one nonsense trading at any time. So because someone said I came in at this time, I left at this time, don't follow anybody. Oh, if your heart enter your mouth, don't mention my name. Then many professionals combine both, but beginners are safer starting with investing. So if you're a beginner, you don't understand technical analysis, please respect yourself and do for long term till you've understood technical analysis, or at least if you have somebody that has the idea of how technical analysis work, you say, okay, let me follow this person's guide, but don't follow blindly. It's okay to do your own findings, check your own things out, that okay, this particular stock this person told me to buy, is it really worth buying at this moment? What if whatever I tell you is wrong? And that's why they always say this is based on my opinion, or it's not a financial advice, because it is just what me I'm seeing. What if you are seeing something else? So that's why you also need to learn how technical analysis work, and what do you call it, and how to read fundamentals. I did that in one of our webinars. Sadly, there's no replay. This one too, no replay. So anybody that not join, I'm sorry, but this is the best I can do right now as nothing is working. So things to understand, right? Traders play the short-term game, investors play the long-term game. And when I say short-term is less than a year, and when I say long-term, if I say mid-term, you can be looking at, okay, between some months to at least 3 years. But if I say long-term, you should be looking at 3, 5, 10 years upwards. You are not rushing to sell anything. You are not panicking if the price is up or the price is down. The only time that even as a long-term investor you can say I need to pull out of this market is if you are studying the company's fundamental and you are seeing that they are doing badly as the year go by. Like the time you decided to enter, they were doing well, and first year they are doing well, second year they started dropping, third year they started dropping, fourth year kilo day, what's wrong with this company? They're not ready to improve. You can say, okay, I'm leaving these people. I cannot keep up. So if their company, if their fundamentals are not doing well, maybe you see that they are um drowning in so much debt as the years go by. Omo, you feel come to, you can actually leave. You don't have to stick to them. But that's after years of, okay, what's going on, what's going on, what's going on. Do you understand? But does not mean that because the price dropped today, you should now rush and quickly go and sell it, or you should rush and quickly say, why is this thing doing like give them time. If you are sure and confident that they have strong fundamentals, this is why most people prefer the banking sector and some of the agricultural sector, like the Okumu, the Bua, the Presco. Then for bank sector, the top five, the Zenith, Access, GT, and Friends, right? Because of their market cap, they have strong fundamentals. They have what do you call it, less debt. So everything is just in their favor. So people prefer to stick with them and they pay dividends. So that's the goal. You're making money through dividends and also through capital appreciation. Let me just confirm if people are hearing me. Where's the call safe?
I can hear you.
We are hearing you.
Yeah, thank you. So um just choose which of them you want based on your personality, based on your goals and your risk tolerance. And yes, you can actually do the two. But how do you do the two? Most times I usually advise that you have two separate accounts. This is why I gave like different list of, oh, download this app, download that app, blah blah blah, because I want you to have alternatives, right? If you want to trade and you know that if you don't buy that stock today, you can lose out completely. And the app you usually use is not working. Quickly buy on the other app. Oh, make your money from there, leave there. That's trade, you know. If it's long-term investment, you don't have to rush to buy anything when stock is going up. You can wait and be patient for it to come back down before you buy. Do you understand? So on that note, you can choose to have one specific account for trading and one specific account for investing. Why do you do that? So that the if the price of the long term own is dropping, you will not be deceived and be tempted to sell that one to buy a short term one that is doing well, or that you think will do well, or whatever. So those short term one may be growing fast, then the long term one at that period. And is the truth, most times when all these risky stocks, all these penny stocks and the likes are going up, for example, during the whole insurance thing that happened last month, if you notice, most strong companies, they did not do well. Their stocks kept dropping. Why? People were selling from them to go and buy into insurance very fast and make money from there. Now, when that happens and there's a drop in price from the strong companies, and most of the strong companies, once you are holding for long term, it's a good time for you as the investor to say, okay, oh, now that everybody's attention is not in this place, let me quickly sneak and go and buy from this my companies. Let me buy more and pin it down before these people come back. If they come back, if they made money from their insurance thing and they come back, the price will come back up again. So good opportunity for you to enter as long-term investor. For your short term, don't go and use your long term money to do short term, but you can use your short term money to do long term. If you make money from the short term own, you can move it to the long term investments. That's how to save and secure your money and not lose it. Because if you're only recycling within short term investment, there's one you will do that you end up losing that money. Oh. So make sure, even if you are taking out profits, take out profits, move it to your long term investments, add more units and all of that, and you're good to go. So you can do the two. You can choose only one. If you don't have high risk appetite, just stick to the long term one. And I don't advise you do only short term investments. You should also have the ones for long term that you know you can keep for always. So I was going to explain some part of fundamental and technical analysis, though I would not go so much in depth, but I think I may focus more on fundamental analysis today because a lot of people have joined us recently. But yes, so fundamental analysis and technical analysis is what's usually used to evaluate stocks before buying. Okay. So, what is stock analysis? Stock analysis is the process of evaluating stocks before investing in it. And there are two approaches to it: the fundamental analysis and technical analysis. The fundamental analysis is you checking the company's financial statement, while the technical analysis is you using charts to study that, okay, will this thing soon grow? For charts, that one is mostly for short term. For fundamentals, that's for long term. You see what the company is doing over time. Okay. So, and you can also combine the two for short term or mid term growth. Now, for fundamental analysis, it focuses more on the company's intrinsic value, right? Okay, what do the company have right now? How big are they? What's their debt? What's all these things? You just go through all those stuff. So based on their financial health, how they manage their money, their industry position. Okay, is this a good industry to invest in right now? So at the end of the day, you can buy undervalued stocks and hold them for long term. So if you look at it that, okay, this particular company, after all my that's why I'm very very bullish on Access Bank. Access Bank is too undervalued and it's paining me. It's actually paining me. If you ask me, I see more value in Access Bank than in GT Bank. But like you can hold this kind of stocks for long term. You say this bank, this particular company, there's so much in this company that other people are not seeing. Do you know that even this whole bank recapitalization stuff, Access Bank gathered that 500 billion before GT Bank? Before them, GT no get the money. But yeah, Access Bank was able to pull that off. Those people, they have money, oh, they have bastard money. That's why they keep acquiring different bank from different companies. So if Access Bank pays good dividends. Like this year, their dividends yield was around that like 10 to 11% before their price even went up a bit, and it made it look like 9% ish. For long term, you can hold it and say I'm holding this for long term for capital appreciation, for what do you call it, for dividends yield. Let me get dividends from it, let me get good capital appreciation from it. If you have like 1 million naira in Access Bank and they pay their final dividends at 10%, you're getting like 100K as dividend. Okay, so whose phone is vibrating? So if you have like 500K, as if they should expect like 50K. Do you understand? Maybe after they've taken out taxes, I'm sorry, before tax also, if it's at 10%, they remove tax too from the money before you get it. So like that, you can just hold strong. Now, the ending of this month, most banks will announce their interim dividends, right, for the first half of the year, and they will pay in October. A lot of people start rushing these things now. So UBA extended their rights issue to like 19th of this month. They are offering at 15 naira to buy two and get one free. Even though people prefer to buy in the market because it was cheaper in the market, so that's totally fine. But once this rights issue is over and they want to pay dividends, people will quickly rush and enter their market, and it will get valued above that 15 naira that they've been selling their rights issue. And once it crosses, there's a very high chance of UBA becoming very bullish from there. Okay, so UBA, Access Bank, they are long term stocks, but you can actually use it to make money for short term. If they do well in the next 3 to 6 months, as a trader, you can sell a percentage of it, take out profit, leave the rest there for long term, earn dividends from it. You can reinvest later again and make money from it. Do you understand? So that's it for that. Key factors in fundamental analysis. You look at the financial statements, the revenue, the net income, assets, liabilities, PE ratio, debt to equity, return on equity, qualitative factor like management team, brand strength, and the likes. So I don't know if my screen is going to share. If I okay, I'm trying to share my screen to show you on. Let me see if present something else. Window. Let me see. Where is my Safari? Okay, let me open my Safari first. Let me open trading view. Okay, hold on. Okay, share. Okay. Um, can I expand my screen on this thing? Which kind of lap this? I think I should have expanded the screen first. Full screen. Okay, sit down. I put this thing on D&D. Okay, so search. Let's search for what was the company that was in my head just now? Um, let me see. Which company should we check for? Okay, let's see Access Bank. Let's see the Access itself and get bullish with it. Okay, so let me be showing you those things I just listed. Should I click on financials? Mm-hmm. Okay. So, what was the first thing I listed from this stuff? I said revenue, net income, assets, and liabilities. So, let's go over that. So, see their this is their overview, right? Let's look for their revenue. Okay, I'm trying to look for something. Okay, see it's revenue. Revenue is about 4.76 trillion, right? Their what's the next one? Was it net income? I said 624.68 billion. Now their assets and liabilities. Where is that place that's their debt used to show? Okay, see the dividends yield. 9 point. Can you see what I'm showing you? Let me be sure first.
Yes, yes.
Yeah,
Okay.
yeah, we can.
This is the
Yes, we
current
can.
dividend yield based on the current
Yes.
price of access. Okay, guys, I can hear you. So this is the current dividend yield based on the current price of access, 9.45, right? When the price was lower, it was about 10 to 11% yield. This market capitalization is what the current price of Access Bank is times all the number of shares left for the market, left in the market to buy. Um, this one might be a bit tricky to explain to beginners. I'm looking for simple things that you can look out for. Okay, debt. Okay, so see the market cap, see their debt. What's it that? Minority interests. Okay, see their cash and equivalents. So their cash and equivalents is about 8.29 trillion, and their market cap is about 1.38. Together is above this their debt of 9.1 trillion, right? So now the enterprise value is what 2.38 trillion after all their debts and all the unnecessary things. So in summary, at least they can pay back their debts. That's the important part of the matter. And okay, dividends history. It was lower for last year. Okay, 2023 was higher. What other one should I show you guys? Okay, they paid their last dividends. That's the dividends for last year. So there's interim dividend, there's final dividend. Interim dividend is for first half of the year. Final dividend is for both, like all throughout the year, both first half and second half throughout the year they pay it. So they usually like last year's own now for from January to December of last year, they paid it this year April, May. They paid it this year May 15th. So now if they pay this interim dividends in October, it's for the first half of this year. It means that for the January to December of this year is next year they'll pay it. Maybe something around this time next year too that they'll pay that one. Oh. What else again? Let me look for a better company that is not in the banking sector because banking sector can be very tricky with their finances. Let's look at Okomo. Just look at this company. You see, Okomo, Bua, and Presco are like the strongest companies that you can live for the longest of time, even till you die. All time, Okumo has grown over 4,000%. And in the past 1 year, that's done 144%. In the past 5 years, it has done 1,200%. That is crazy. 1,200. Wow. So, let me see. I think I should open from the financial. See their market cap, 972 billion. Dividend yield 5.69. The dividend yield has even reduced because their price has gone up, but that's fine. Then okay, let me click on it like this. Hold on. Uh-huh. Okay, good. So see their free floats. Remember I always tell you guys to look out for free floats. Their free float is 32.33% and closely held shares is 7%. If you see any stock that the closely held shares is over 80%, you should be very scared of staying there. And that's why initially I had a problem with us investing in Dangote Cement and Boa Cement. But the good news is, if you see very well from the list, I put it that is for mid to short term, and be short term to mid term, because you can go in and go out when it is bullish. People are rushing to buy. You can easily go and sell because you've entered early. But unless you're holding these two companies, that's Dangote Cement and Bua Cement, for a very, very, very long time, and you don't have intentions to quickly sell, you can leave it. And the second thing is, if you know that it's going to be very bullish very soon, like this December period now, there's very high chance they will be very bullish, right? When you've entered early, people will be rushing to come and buy. Then you can easily sell and leave the market, or sell part of it and leave some for future use, and you're good to go. Because those ones, I think Boa Cement is like 90 something percent closely held shares. Oh, that's great. God forgive me. For Dangote Cement, it's like 89%. So that's crazy. But someone leaving us 30 something percent is very fair. 20 something percent is very fair. Do you understand? Now, see something. See their debts. See their market cap, 972 billion, but their debt is just 28 billion out of it. See their cash equivalent, they still have like over 41 billion in cash, meaning just their cash alone can pay back their debt almost twice. And then even the market cap, if they say they should sell all their shares and all of that, it can pay this debt like 1 billion times. Like, let me not use 1 billion, let me not be dramatic, but then you get what I mean, right? Good. So um which other one should I explain? So, okay, they make more money from palm oil than rubber, mostly palm oil and rubber, and very little from palm oil processing. So there's difference between palm oil processing and palm oil itself. What's that? And it's just in Nigeria they are functioning. What else again? Okay, their payout ratio is about 89.79%. That's fair for dividends, and they kept the remaining, how many percent would this be? This would be like 11% or something that they kept to grow back the company. Okay, so see their last payment date was this one we received recently last month. They paid out 5.69% based on what the current price is worth right now. Then what else again? Okay, I spoke about asset and liabilities. Can you see their assets is the like deep blue one, and see their liabilities is lower than the price of the assets. So their assets can still pay for their liabilities. So for the long term one, this is for the short term one, the long term one too, the assets is still more than their liabilities. So this kind of company that you see with strong standing, even if their stock drops, you will not panic. Now, I will not tell you to rush and go and buy Okumo oil, because I'm waiting for the price to drop. It's going to drop really soon, maybe towards the ending of this month, maybe towards beginning of next month, but it's going to retrace back a bit, and then we can now buy more. So people that bought before, good for you. But if the price drops, even if it's below the price you bought it, please just acquire more and don't consider selling out of panic. This company now has very good fundamentals, and it's not the type of company you should be rushing to sell. Now, which other one? Brand strength, yes, is a solid company. Which other one? Management team, competition. Who is their competitor? Presco. In this game, you are there to make money, or not for you to be looking at who is fighting with them. But then their competitors in the market, especially in the stock market, is Presco, and I think it's just both of them. Then Ella Lakes that just recently joined them, that is not even a competitor to them, because Ella Lakes is learning from them. So what else again? their CEO, Graham DeHeffer. So you can check this guy now. And in case any bad news from this guy wants to spoil this thing, you keep track of him. Do you understand? But then I think they are in good standing, like they're in a very, very good place right now financially. And it should be a company that anyone wants to keep for like the longest of time. Okay. Then which other company should we check for? Should we check for Presco? Let's check for Presco. Can you guys hear me? Just in case. Can you see what I'm doing?
Yes, we
We
can.
can
Yes,
hear you.
Okay, very good. So, what's going on? Why is the dividend still showing 0.0? I thought they recently paid dividends. Okay, so they are closely held shares is 60%, free float 40%, very balanced, very, very balanced. 1 billion ownership, 600 million closely held, and 400 million the market. So now see, their market cap is even higher than Okumu's own. 1.48 trillion. Okumu is like 900 and something billion. And their debt is 159 billion. Omo, they go pay am like how many times? Then they still have like cash equivalent of now 97 billion. So that's very fair. Very, very fair compared to some other companies. I'll show you an example of a company that is currently in debt right now. And unless you're a high risk taker, there's some companies you can take as high risk for long term because now they are worth nothing and very soon they will be worth something. Okay. What else again? They are into crude and refined products. They have a branch in Nigeria and in Ghana. These are things you should just note about them. Their last dividend this thing was okay. They are paying another one in November. So I think Presco actually pays dividends every quarter, if you ask me, because I think they paid ending of July or beginning of August, and they're going to pay another one again in November. So that's like 2.84%. So I think they pay every quarter. That's good. Okay. Then which other one? Okay, this is dividend history. It has been increasing over the years. Over the years, it has been increasing. So hopefully this year too, it will be doing very well. So for this year, this is Q2, second quarter of this year. They have a debt of 159 billion, but they have a free cash flow. Wow. So see Q1, they were in debt, like their free cash flow was like minus 60 something, and they had a debt of 161, but they were able to reduce their debt to 159 and move this free cash flow from minus 60 to plus 80. That's crazy. That's like a very crazy something. It takes a lot of effort to be able to achieve this, and that's something a good company can do. See, their short-term assets is higher than their short-term liability, and their long-term assets is still higher than their long-term liability. So if you ask me, that's a very good company for long term. So same as Presco, the price may still come down a bit. So I'm not saying you should rush and go and buy now. You can wait for the price to come down and then you buy more. Okay. Then okay, let's check this our recent listing. I sent a video showing this recently. This one is even based on technical analysis because it's a short-term investment. But let's still check their fundamentals together. It's more of a technical analysis, bullish point of view, and based on what government is cooking up. Why do I keep canceling this? Okay, I've clicked on it. Okay, see, they have a free float of about 26%, right? So that's fair. See their market cap 143 billion, and they have a debt of 71 billion. A bit fair. Minority interest is in negative, and their cash equivalent is 40 billion. That's fair enough because that's including their market cap can cover the debt. It means when you see if a company's um cash equivalent and market cap is very low compared to the debt, it means if they lose money or they shut down or liquidate, they cannot pay you. But if at least all of this can cover for it, then at least if they shut down, they can pay you back your money to a good extent. Um, price to earning ratio is 25 times 36x. That's crazy. Okay, so what else? What else? As a beginner, you may not understand some key terms. Maybe something I'll look out for in our next webinar. So you look out for it. They've not paid dividends since 2021. They've not paid dividends, and I doubt they're going to pay this year too. So we're in it for capital appreciation for short term. So a company that is not paying dividends, I don't know if anybody has any why anyone have been in business living it for long term. But yes, you can still live it for long term. Maybe it's currently very much undervalued and very soon it will do well, but based on just capital appreciation and that's it. Their short-term liability is a bit higher than their assets, but their long-term liability is less than their assets, so that's still very fair. um Financially, they are just okay. Let's call them the average living Nigerian, right? That you are okay. You're not in so much debt. You feel sort yourself. That's the kind of English you use. Oh, you feel sort yourself. So you don't have so much problems or headache. But yes, if you get money, if you guide extra, say you will do better than this. But guess what? This company is going to do really, really well based on the technical analysis and what government is saying and okay, let me show you their recent financial kidney thing that they dropped. NGX is it even this. Okay, equities. Apparently e-transact did 50% this week. Oh, and I wanted to buy it last month, but I said no. I should stop chasing stocks, but what's that? It's not a problem. We're looking for, sorry, let me just look for, I lost my train of thought. Industrial goods. No, it's in consumer, not industrial. Consumer goods. Okay, these are what they've grown this year. I'm in the wrong place. I'm in the wrong place. NGX. Equities price list. Where is PZ? It's been like number 4 on P5. Letter P. Oh, now, please now. Where is letter P? Hey, now. Okay, see it. Phew. So, the last 1 year, this is how high it has been 43.35 before the price got rejected back to this. Then the lowest, okay, this for a day, the lowest it has been in the past 1 year is 15 naira. So imagine people that bought at 15 naira and they are holding strong till now. Then I'm looking for their paper. So remember when I spoke about the unusual increments? Okay, this has passed like the number of days, but since beginning of this month, there has been an unusual trading. Normally, this thing is bought in thousands, but suddenly we are seeing millions of units. People are gradually entering the markets. Gradually, they are entering this particular market. So we're observing when you see unusual tradings like this, there's a very high chance that something is about to happen. And when you see millions, just know that you should be expecting that is industrial um traders, institutional traders that are involved. Now them get hand for that matter because they usually trade with people's money. They trade big. So let's check their financial statements. The last one that they recently dropped. Mhm. Well, PZ was in like debt from last year to this year, but they've been able to recover to a very good extent. Okay. So see this. This is a comparison from 2024. Is this second quarter or first quarter? Self, I've forgotten. I think it's first quarter. They share up till May. I think it's either first quarter or second quarter. I can't remember which of the results this is for, but it's their last result. So last year, around the same time frame when they released this particular result for last year on, this is how much they had in revenue. But the same period of time this year, this is how much they had in revenue. So they went from 152 million to 212 million. Their operating profit went from a negative of 124 million to a positive of 18.9 million. That's crazy. Like for you to be able to, well, that's actually crazy. Can you see the change? 115% in a year around the same time frame. And their profits or loss before tax, they had a loss before tax around same period last year, 122.4 million. But same period this year, they've been able to cover for this loss and enter profits. They grew at 114%. Now their tax, this is tax. Then for profit after tax, which is what most people are usually interested in, which started causing the rally, this went from 90.3 million naira loss to a 10 million naira profit. That's you paying over 100 million naira to pay for both your loss and to start making profits. That's crazy. Okay. So they also went from 7.6 million debts to 859 thousand. So this is just for either first quarter or second quarter. It's not even clicking in my head right now. But okay. So can you see all this one's in brackets? It's literally from a loss to a profit this year. And that's very, very fair. So if you see fundamentals like that, there are other ways to calculate all these things using all these figures, right? That might be a little bit complicated. But once you see this, you should know that okay, they're in a very good place right now. And for someone to be able to recover from so much loss and they're starting to do better, then you should know that there's a chance of them doing really well very soon. And um this whole economic stuff that is going on, this whole government and all of that, they are targeting industrial and consumer goods as a whole. So I think we should leave fundamental stuff and the practical and continue with the course. Let me see. So far, do you guys have any question? Or should I finish? I think I should finish first so that we'll not deviate.
Still need for
Yeah, we
Okay.
have 3 minutes
separate
left.
website, but
As in-
I welcome your thoughts.
Lord of Jesus. It means I have to send new link again. Or should we close the class for today? Or you want to learn more?
I just they come on.
I want to learn more.
Oh my god. um let's see, Sha. But it's 3 minutes. I think I should just quickly create the link and we should share before it ends by itself. Probably should send another link ASAP, or I should just let me wait and see. But I will not just know if I'm talking out of the screen. But let's see, Sha. Okay. Examples of fundamental analysis is Dangote Cement. You check the revenue growth. Is the dividend history consistent? I've shown you some of these ones that some companies are paying consistently. Is the debt level moderate or is excessive? Is it fundamentally strong and a long-term hold? So if you check all of this about Dangote Cement, you see that their revenue has been growing. Their dividend is consistent. Their debt level is moderate. So just like how I helped check for like other companies, that's how it is for like Dangote Cement. In conclusion, it's a very strong long-term hold. So like I said, if you want to hold Dangote Cement, you might either hold it for a very, very long time, or if you want to trade it, only trade it when you know that people will soon rush the stock, you buy and quickly sell. But if you say you just want to buy normally and sell, maybe like in like 2 months time, anytime you feel like selling, there's a very high chance you'll not see anybody that will buy from you because it's not so liquid. So yeah. So key factors in um Key factors in fundamental analysis is focus on intrinsic value of a company by studying its financial statements, earnings, and overall business health, and best suited for long-term investors who want to build wealth gradually. Okay, so this is for technical analysis. I think we can end it here actually.